Subscribe to our channel and click on the bell button to receive important financial updates faster than anybody else. Friends, welcome to another video on your channel Profit and Equities. Now, if you like our content, please don't forget to hit the like button. Also, subscribe to our channel and click on the bell button to receive important financial updates at the earliest. Now, today we bring to you 6 stocks which are the top Holi Stock Picks from HDFC Securities and Angel Broking. Please go through the list and check whether these stocks would meet your investment criterion. Now, the first stock pick from HDFC Securities is IRB Bearings Limited, which is engaged in the manufacture of ball and rodal bearing. The company is engaged in the design and production of customized friction solutions, and it operates through the bearing segment in India and also outside India. The one-year chart reveals that this company has created some wealth for its shareholders. The market cap of the company is 1568.21 crores, which means that the company is a small cap one. The EPS is 7.02, which translates into a price to earnings ratio of 23.05, which is cheaper compared to the industry PE of 39.28. The book value is 34.70, translating into a price to book ratio of 4.66. The dividend yield here is 0.87, whereas the promoter holding here is decent at 54.09. The 52-week high for the company is 182.30, whereas the 52-week low for the company is 102.65. Now friends, this company is currently available at 161.80 and the target price here has been provided at 204. Now, if you were to look at the reasons why HDFC Securities thinks that this could be a potential outperformer, IRB Bearings is witnessing strong growth across OEM segments which account for nearly 65% of its revenues. Export growth has also picked up, led by a recovery in the North American and European truck PV markets. The company is also looking to procure incremental revenue from the defense, marine and railway segments. With no major capex in coming years, IRB is likely to cut down its debt levels, resulting in improvement of return ratios by 300 to 400 basis points over FY17 to 20, which in turn will make it an outperformer. Now, the second stock on the list is Petronet LNG Limited, which is available at 240.80 and the target price here has been set at 304. The symbol for it is PETRONET. Now, Petronet LNG Limited (PLL) is engaged in the sale of regasified liquefied natural gas. The company is engaged in the import and regasification of LNG. The company operates through the segment of natural gas business. Now, the one-year chart shows that even though the company went on an upward spree for the major part of the year, but of late there has been sort of a consolidation. The market cap is 36,120 crores, which means that the company is a large cap one. The EPS is 13.51, translating into a price to earnings ratio of 17.82, which is much cheaper compared to the industry PE of 22.64. The book value for the company is 53.88, whereas the price to book ratio thus is 4.47. The debt to equity of this company is 0.4170, whereas the return on equity is 0.1475. Now, the dividend yield provided by the company is 1.04 and the promoter holding is average at 50. The 52-week high for the company is 275.65, whereas the 52-week low is 175.80. India's LNG demand is expected to double to 45 million tons annually in the next 4 years on the back of increasing demand from power and fertilizer sectors. Now, rising demand coupled with completion of the Kochi-Mangalore pipeline and expansion of the Dahej terminal is likely to boost volumes. Now, the next company on the list is Infosys Limited and it's available at 1160.75. The target price here is 1325 and the symbol is INFY. Infosys Limited is engaged in consulting, technology, outsourcing and next generation services. Its segments are financial services and insurance, which is FSI, manufacturing and high tech, which is MFG and high tech, energy and utilities, communication and services, retail, consumer packaged goods and logistics, and life sciences and healthcare. The one-year chart shows that this company was not doing much for the majority of the year, and it's only recently that there has been a spike. The market cap of the company is 2,53,501.97 crores, which means that this company is a large cap one. The EPS is 75.83, translating into a price to earnings ratio of 15.31, which is much below the industry PE of 21.82. The book value is 311.18, translating into a price to book ratio of 3.73. The company is debt free and hence the debt to equity is 0 and the return on equity is 0.2521. The dividend yield provided by the company is 2.22, whereas the promoter holding is 12.98. The 52-week high for the company is 1221, whereas the 52-week low is 860. Despite a turbulent internal phase as well as a challenging business environment, Infosys has maintained its market share against peers. The appointment of a new CEO and the revamped board has brought fresh strategy, higher investments in platforms and a better execution engine, leading to higher total contract value. Now, the fast reviving US banking and financial services segment led by Europe earlier and scalability and build-up of momentum in top 11 to 25 accounts would drive incremental growth in coming years. Now, the first stock from Angel Broking is L&T Beck India Limited, which is available at 2008.15 and the target price here has been set at 2500. The symbol for it is ELANTAS. L&T Beck India Limited is engaged in the business of electrical insulations and engineering and electronic resins and materials. Now, the one-year chart reveals that this company has not done much and has not been a roaring success. The market cap of the company is 1592 crores, which means that the company is a small cap one, whereas the EPS is 69.79, translating into a price to earnings ratio of 28.77, which is below the industry PE of 35.11. The book value is 349.68, which translates into a price to book ratio of 5.74. The return on equity is 0.2217 and the dividend yield provided by the company is 0.22. The promoter holding here is good at 75, whereas the 52-week high is 2395. The 52-week low for the company is 1726. Now, Angel Broking says that L&T is likely to post subdued calendar year 17 numbers, mainly marred by GST woes and poor offtake from the customer side. The demand would pick up from calendar year 18 onwards, which will boost the earnings CAGR to 17% over calendar year 18 to 20. Current valuations at 22.4 times calendar year 19 EPS looks attractive considering its growth potential and higher return ratios. Now, the second company from Angel Broking is Safari Industries Limited, which is available at 533 and the target price here has been set at 650. The symbol for it is SAFARIND. Now, Safari Industries Limited is engaged in the manufacturing and trading of luggage travel goods. The company's product range includes polycarbonate, zipped luggage. The one-year chart reveals that this company has been on an uptrend, but of late in the recent market correction, this stock has also corrected. The market cap of the company is 1185.93 crores, which means that the company is a small cap one. The EPS is 7.63, translating into a price to earnings ratio of 69.86. Now, this is much more expensive compared to the industry PE of 37.63. The book value is 45.04, which translates into a price to book ratio of 11.83. The debt to equity is 0.4311, whereas the return on equity is 0.0960. The company has a low dividend yield at 0.08, whereas the promoter holding here is average at 57.80. The 52-week high for the company is 1800, whereas the 52-week low is 320. Now, Angel Broking believes that this is a strong brand play in the luggage industry. The next company on the list is HSIL Limited, which is available at 436 and the target price here has been mentioned at 510. Now, HSIL Limited is an India-based company which offers sanitary ware, faucets and glass bottles. The company's segments include building products division and packaging products division. The one-year chart shows that the company was on a consistent uptrend for the initial part of the year, but of late it has fallen in the general market correction. The market cap of the company is 3152.12 crores, which means that the company is a mid-cap one. The EPS is 11.29, which translates into a price to earnings ratio of 38.62, which is largely in line with the industry PE of 33.04. The book value is 200.57, which translates into a price to book ratio of 2.17. The dividend yield is 0.92, whereas the promoter holding here is average at 48.43. The 52-week high for the company is 564, whereas the 52-week low for the company is 278.40. Now, friends, the reason why this stock has been chosen is because the market in which this company functions is expected to grow at 10% CAGR going forward on the back of increasing disposable income, urbanization, evolving preferences and government initiatives such as Swachh Bharat, Housing for All, Smart Cities and others. Now, HSIL expects to launch security caps and closures in Q1 FY19, which would be able to generate revenue of around Rs 130 crores on full operating basis. Now HSIL is also entering the PVC pipe segment, which is likely to start commercial production in FY19, and it will also be able to generate revenue of rupees 400 crores on peak utilization. Now the company has entered new segments like consumer pipes and caps and closures, which will drive further growth, and Angel Broking expects HSIL to report net revenue CAGR of 12% to rupees 2,905 crores over FY 2017 to 20. On the bottom line front, it expects CAGR of 15% to rupees 154 crores over FY17 to 20 because of improvement in operating margins. Now all of these reasons combined will make it an outperformer going forward. Now friends, please don't consider any of these to be stock recommendations. Please go ahead and do your own research, and this is all what we wanted to show you for today. Thanks for watching, and we'll be seeing you soon with another video.